Please welcome Phil.
Hello.
Hey.
I want to bring up Andrew Davis from T. Rowe Price.
How are you?
And Hunter Keay with Wolfe Research. You guys right here.
All right.
And the way we're going to be structuring this panel is a little bit of discussion up here, very little, more of their thoughts than anything else, and then open it up for your questions. I tend to believe when we've done these types of events that when there are questions from the audience, it tends to be a far more engaging panel and more interesting. So I'm going to start first off with each of you. Give us a very short explanation of A, what you're doing right now and what you're most interested in right now when you look at the airline industry. Andrew, go ahead.
Yep, sure. So I'm Andrew Davis. I'm the investment analyst that covers transportation at T. Rowe Price. We manage about $740 billion across several asset classes, mostly U.S. domestic equity, which is around $475 billion. So I cover railroads, trucks, and airlines, and I'm also an associate director of research at the firm. From my perspective, I kind of hit starting my coverage of the airline industry at what I would say is a very opportune time. So, everybody knows there's some luck involved in careers many times. So I started looking at the airline industry roughly 3 years ago when it was on the precipice of what I would call dramatic improvement. And there was a lot of levers and a lot of conditions that were, amenable to me to saying that this industry had dramatically changed, and it was changed for the better and probably on a more permanent level than people realize. And I would argue that some of the market has not realized that. So from my perspective, a lot of what I'll probably try to talk about today is the benefits that consolidation have given us now, the benefits in terms of how long they'll last, and what the profitability of these airlines kind of means, not just for investors from my perspective. I'm a fiduciary on behalf of all the investors at T. Rowe Price that own these stocks in our mutual funds, which is largely within 401k accounts for people's retirement. Hopefully there are some T. Rowe Price 401k holders here. I don't, I get removed from the sales side, so I just hope there are some out there. And we also do endowments and pension funds and things of that nature. We don't really do a whole lot of high net worth and kind of fast money. Our investment philosophy is generally a 3 to 5 year time frame. So we're a longer term investor, typically look for stories where there's a durable asset that can last, and compound wealth over a longer period of time. So I think what I'm going to do is relate essentially why the airlines in the situation that they're in now relates more to what a long-term investor is looking for these days.
Hunter?
Hey, thanks. Yeah, I'm Hunter Keay. I work for a company called Wolfe Research. I am a sell-side research analyst. I'm on the sell side, which means I write research reports. I make ratings recommendations. So when you see headlines like this particular company downgraded this stock, that would be something that I would do. Andrew is on the buy side. He is a client of mine. Andrew is the one actually buying stocks. I just talk about buying stocks and write about buying stocks. My clients are a lot of long-only money, like Andrew, who's got a good multi-year time horizon. Andrew's the type of investor that airlines have been desperately seeking out for the last few years, really for the last 30 years, without much luck until lately. And a big portion of my other clients are hedge funds who manage obviously billions of dollars, trillions of dollars at a generally higher turnover rate. So there's a broad mix of clients that I talk to and I write my research. As a sell-side research analyst, I tend to take a long-term view. I understand that there are people in the market making trading calls, but I tend to make a longer-term perspective, a longer-term view on how the industry is changing. And what I like to tell a lot of people who are thinking about investing in the airline industry is that, the renaissance that we're seeing in the industry is sustainable. And the change has come out of the two crises that we saw, which really created the worst 2 years in the history of the business, in 2008 from the fuel spike, and 2009 from the recession. And since then, airlines got disciplined on capacity. So there's really about three tenets of change here. It's capacity discipline, it's consolidation, and it's unbundling, charging customers for things that they used to get for free. And airlines have really struggled with managing down that sense of entitlement from the consumer, which is still a problem, and that's really going to take decades to go away. But change is happening. We're still in really the middle innings of this renaissance, and I believe it's sustainable. And I pitch that, and there's a lot of skeptical investors out there that it is sustainable, which is why airline stocks are still very inexpensive on valuation metrics that we look at relative to other industrial companies and other transportation companies, which to me implies a deep skepticism from the investment community about the viability of the estimates that I put out there that I believe airlines can achieve over time. So hopefully that explains a little bit what I do, and we can have a fun conversation.
So let's a couple of points that you guys made there that let's explore a little bit. The first one is the skepticism that is out there amongst investors. And we hear it on CNBC. I get emails from people saying, look, I bought Delta at this price. It had a nice run over the last 2 years. That's the best it's ever going to do for this period. And we all know that airlines can't maintain success, so I'm dumping it. Just using it as a hypothetical, that type of comment. So that brings up the question, do you believe that the airlines can sustain this for investors in terms of profitability and growing not only their share price, but their profitability?
Well, yeah, first of all, I would say that people who say that have already been wrong, right?
True.
Someone comes up to me and was like, oh, I'm telling you, man, it's going to blow up. I'm like, well, guess what? Delta's already quadrupled, so you're already wrong, right? So, you know, that's not the person I'm trying to convince here, right? I'm trying to convince them that it's going to double again from here. So
Right.
It's a good question. And I think that, you know, I'm interested to see what happens when the next challenge comes, whether it's a commodity spike or a recession. I'm excited for it in the sense that I think we're all going to find out that airlines are going to be more nimble. They're going to cut capacity. If demand starts to falter, you're going to, rather than seeing and planes start to become less full, what airlines would do 20 years ago is they would just lower fares to make sure that their load factors stayed at a certain level. Now you're seeing some of that occur now in international markets today. You know, it's not crisis levels, but you know, demand is softening in international markets. And airlines are responding by lowering fares if they have to, but also cutting capacity. So that's how you sustain pricing, right? So when you go down into another downturn, you know, it's not going to be defined by deep troughs and low peaks because it's going to be met with capacity pullbacks in addition to more moderate declines in fares, which is different from how it's been before.
Andrew, you believe that during the next trough for the business cycle, whenever that comes, you believe that the airlines will be positioned to at least maintain some profitability, let's say over a full year.
That's
that
right.
they may have a quarter or two in there where they lose money, but it's not going to be like it was in previous cycles when a trough usually meant the sky is falling.
Yeah, I certainly believe that. I would say certainly the shoulder periods in the first and fourth quarter would be very difficult to maintain profitability, whereas people are making money in those quarters now. Whereas, you know, your whole year was based on Q2 and Q3. I actually kind of believe, given in the construct we're in now, where you have 4 carriers that roughly control anywhere, depending on how you want to measure it, 85 to 90% of the capacity in the domestic United States. Decisions to, you know, radically pull back capacity and manage capacity can be made in a much more rapid pace. And so if we were to experience somewhat of a relatively quick or abrupt downturn or a commodity spike, it's much easier when you have fewer number of people out there in the room that you're competing with to come to a rational decision and in aggregate in the industry. So what I would say is when you have 4 carriers that control that much capacity, it's a lot easier for them to come to the decision of, gosh, guys, you know, I think we should pull back. When it was 12 people, you know, 15 years ago, you never knew what all 11 were going to do, and it was hard to come to a consensus about what the right business decision was to make. And I think one thing that, Hunter had mentioned a few reasons why he thinks he's going to, maintain and improve profitability from here on. And another reason I think that it still is good in the downturn is management incentives have changed dramatically in this industry, more towards the returns on capital employed, which is a metric that longer-term investors such as myself look at very intensely. We look through the proxies, we talk to them about corporate governance, we talk to them about ways that they should be compensated so that it aligns with shareholder interest. And if you want longer-term investors, and I'm not saying it provides you permanent capital, but I mean, from a context of making you a viable investment to a less volatile group that doesn't trade your stock in and out, returns on capital is a very important metric, and I think if that's the proxy of which they manage their business, decisions will be made relatively quickly in a trough so that I think they can maintain profitability.
Again, we're going to open up for questions. So at some point, if you have a question, just raise your hand. I know Keay said there's a couple of people walking around with microphones. Be happy to come over. And these guys, we talked backstage, and they said, hey, we definitely want questions. So feel free to throw one out if you have one. I want to talk about the sense of entitlement.
Yeah.
And the belief that this is a change that has to happen. How much of it has happened with the flying public?
Some of it, it's like turning a ship. You know, I mean, it's something that first of all, as a sell-side research analyst, you know, a lot of my clients, all my clients also fly in airplanes, and they're also customers, right? So, you know, they'll complain all the time about this, that, and the other thing. I'm just like, man, you have to understand, like, how would you feel if you owned a huge 15% of the company? Would you still complain about the fact that you just got charged for that bag? No, you would not, right? And
They're in the business to make money.
right, exactly. You know, and it's I mean, I don't know why we still get free sodas on airplanes. Every time I see that beverage cart come rolling down the aisle, it just makes my blood boil, right? I'm taking Amtrak in a few hours. I'm gonna go in a cafe car and buy a Diet Coke when I want one, right?
I don't like the cart because I always get the aisle and they hit my elbow.
Yeah, oh, me too, exactly. It's everything about the beverage cart just kills me. But,
It's a relic.
You know, look at the bin above your head. I mean, Boeing passed that cost through to the airline, and yet we as customers feel entitled to have access to that bin space with our ticket. Why is that? Yeah, they should sell you a Keay.
Because it's a carryover from the old days.
No,
Yeah,
it is.
well, they should sell you a Keay.
natural evolution. Yeah.
Right? And before 1978, when the industry was deregulated, airlines competed on product. And the Civil Aeronautics Board told the airlines what they would charge, and the airlines got the customer because they said, I've got like roast suckling pig in first class, and it's over that like
And
silver
everybody gets
dome thing, right? Yeah, exactly. So now it's like, hey, you got to fly American because we've got the best service. And a lot of people in this room flew in the 70s. A lot of people running airlines flew in the 70s. A lot of people regulating airlines flew in the 70s. And they think about that with fond memories. And I'm sorry, but those people have to basically die. And it's going to take 40 years for that to
So
happen.
not for another 10, 15 years.
No, I mean, that's how it's going to have to just go down. It's just going to be this long, multi-decade long sort of washing out of entitlement. And you've got heroes of the industry like Spirit Airlines resetting expectations for what customers get with their cost of a plane
Let's
ticket.
talk about Spirit just from this standpoint.
Yeah.
As much as they are derided, and I get emails from viewers saying, these guys are ripping people off,
Do you still,
nickel and
though?
diming them. I do get these.
Still?
And yet at the same time, if I email back, what I also hear is, yeah, they're making money and they're doing a good job.
Yeah. Would you want to own the stock?
So that's the question. So from your perspective, do more executives in the industry look at what's happening, not just with Spirit, but with other airlines, and they say, these guys are getting it. They're changing the game.
Yeah, let me tell one story. I'm sorry to talk so much.
No,
but let me tell one story.
I always enjoy our conversations, as you can tell.
I was watching football this weekend, watching my beloved Buffalo Bills go 2-0, by the way, and there was a commercial for Nationwide Insurance, and it was like a house that had a fire in it or something, and this woman in this like leather outfit comes in and starts like replacing laptop computers and coffee makers, and at the end of the commercial it says, we put our members first because we don't have shareholders. And I was like,
That's
oh, that is
ridiculous.
perfect. Good for them, right? Good for them. They don't have shareholders and they know it. So if they want to prioritize members and make a 1% profit margin, or whatever the heck it is, and not earn their cost of capital, good for them. But when you go public as a company in the United States, you relinquish that right to put your customers ahead of your owners. Management teams have fiduciary obligations to earn their cost of capital and make their owners money. This is America, that's how it works, right? So if you know, customers are going to fly on publicly traded airlines, they need to understand that they are second in line because the fiduciary obligation of the people setting these policies lie with making money for their owners.
So both of you believe, am I correct? Fares should be higher. Airfares should be higher.
Yeah, I would say in aggregate, I mean, you can go back to airline revenues in aggregate as an industry relative to a percentage of GDP is still below where it had been in prior cycles.
Mm-hmm.
And that was back when fuel was $20 a barrel. Okay, so we're not even close to those levels. I feel like fares, it's probably going to be in more niche markets, but I think they need to be coming up. You know, it's not going to be like a 20, 30% bump, but I mean, you will see them edge up over time, I think. And I would also say this. We talked a little bit about like some of the customers need to kind of really understand that, you know, what they're paying for and what they're getting as a result. The unbundling in the market of what the fare really gets you is really important, and I think over time people were getting used to it. The most recent J.D. Power survey that came out a couple of months ago, highest ratings the airlines have gotten. I can't remember if it was an all-time high rating, but it was pretty close to it. And why is that? Because people are starting to finally figure out, since these fees started in 07 and 08, what they're really paying for, and then realizing that they're only paying for what they want. So in my argument, that's kind of a crucial step. We're evolving in that respect. I would also say that the benefit of airline industry becoming profitable and hitting their returns on capital, and in my opinion, there's been targets put out there by airlines from an investor's perspective because of the inherent pro-cyclical risk of these businesses. They will never get away from that. They're very tied to GDP conditions. The cost of capital is a lot higher than what some airlines are kind of putting out there as targets. I have had
It's a good start.
I've had many conversations with those airlines about that because of the what I would call, it's a little bit technical, but a duration mismatch of how much they have to deploy in capital relative to the volatility of the returns they'll get on it over time. When you're buying an aircraft, you're buying it for 20 years. You had, your largest piece of your cost stack, anywhere from 35 to 40% is fuel. You have no idea what it's doing. You've seen what it's happened over the last 12 years. I remember talking to someone at Continental a long time ago, or someone that still works at United from Continental. And I was like, why did you guys order all these 50-seat RJs? They're like, well, to be honest with you, I didn't really expect oil to go from 20 to 100. And now a 50-seat RJ is uneconomical. So, when you think about the context of all these profits, what do? Well, they actually do help in the long tail consumer service. I think we've seen this. I cover the railroads. And once the railroad consolidation story finished, there was a lot of margin improvement up front, but a lot of what happened with the margin was reinvested in increasing the service levels and improving operational reliability, which helped them gain share and volume, which means that passengers will benefit from that as well. I think people don't understand. I worked at Arthur Anderson my first year out of undergrad, which is a very interesting time because it was also during the beginning of a recession. And culturally, when your company is not on solid footing, it can be a very disturbing time. And I think literally over the last 12 years, up until maybe the last 3, the airline industry has been as much turmoil as it possibly can. And you just cannot provide the best customer service and the best operational reliability when you're worried about making payroll in a quarter, staying liquid, or going default and filing bankruptcy. It's culturally impossible to do that. We're in a very stable environment now. And I think one of the benefits that consumers will see, as I know many of you write from that perspective, is over the next 3 to 5 years, you will continue to see that J.D. Power survey and other surveys appreciate in terms of the level of service and what people feel out of these airlines, because they are making investments, and you will see the fruits later in customer service.
I know we got a question back here. Hunter, I want you to answer while they bring the microphone over. Did you have a thought there in terms of fares do need to go up?
Well, they do. And by the way, customers also like bag fees. Whether they want to admit it or not. I've seen surveys where it's like 97% of customers don't like the idea of a bag fee. I don't know what these like lunatic 3% customers are, by the way, but and then
they could probably survey them about U.S. income tax.
Yeah, exactly. And then you turn around and you say, do you like the idea of just paying for what you use? And it's like 95% say yes. Well,
right.
That's the same question asked differently.
Mm-hmm.
Right. Anyway.
Question, go ahead.
Hi there, Karen Walker, Air Transport World Magazine. So obviously I agree with what you're just saying. I'm sure everybody in this room, because of our knowledge of the industry, agrees with you. However, you've got the general media and the so-called pro-consumer groups really campaigning right now against ancillary fees, saying it's horrific. The airlines are reaping in now all these billions of profit. So what could the airlines or the industry do better to get that message over? Because I don't think it is getting
Yeah, you don't
over
think it do? They could print an income statement on their napkins instead of some stupid catchphrase about how many markets they serve. They could show how much they pay for fuel, how much they bring in revenue, and where that revenue goes, and just how bad their profit margins are relative to other industries. They could educate the consumers in simple language on their cocktail napkins about how much money they're actually making. So that's a practical answer to your question. Yeah, Spirit customers get it.
But to play off of her point also, have you ever seen definitive research that shows that airlines have lost customers if they've raised ancillary fees? Definitive. I
Not to a material degree.
I hear anecdotal bitching, but I don't hear any definitive
completely
research.
Inaccurate.
No.
Look, I can tell you this from the standpoint of the industry is consolidated, yes, we know, but who are your options to go fly that doesn't charge a bag fee. It's an unbundling process the whole industry has had to adopt, ex-Southwest, and who knows, maybe at some point they decide to do it too if they feel like that would be
And to
benefit
their credit, they
customers.
have said, look, we decided not to, and we believe that that gives us a competitive advantage, which is
Sure.
fine. That's how they decided to manage
Sure.
and deal with it.
I would say certainly though that it's just, it takes an evolution of people's understanding of the cost to fly over time. I mean, if you were to tell people that fuel is 35 to 40% of that fare, I mean, that means something, because people were saying, gosh, in my own budget, my car, gas for my car, yeah, it's gotten a lot more too. Okay, so I kind of get this. I think what they don't realize is that the fares are still relatively low on an inflation-adjusted basis.
Yeah,
and that kind of perspective is over 30 years, so it's hard for people to kind of just keep that in today's world perspective.
Yeah, people think the airlines are making a ton of money, and on an absolute basis, they're making margins are as high as they were in the late 90s, which is the last cycle peak. But GDP growth was north of 4%, and airlines are paying 45 cents a gallon in jet fuel. Now GDP is 2 to 3%. They're paying $3.10 per gallon in jet fuel, which shows you how much better they've gotten. But they're still not earning their cost of capital, which is what this gets down to. And Karen, what I think people need to understand is, let's draw a personal finance analogy. If you were to go to the bank and take out a loan at 6% and invest it in something that earns you 4%, that would be a stupid decision. Well, that's what's happening right now. When guys like Andrew invest their capital in airlines and those airlines earn less than he's borrowing it for, that's a dumb decision, right? So and that's the analogy. That's what people need to understand. Like, go to the bank and do that, and you'll realize within a month that was a dumb decision to make. When your return on invested capital is 7% after taxes, and your cost of borrowing, whether it's debt or equity, the two components of invested capital, on a weighted average basis is 10%, you're destroying money. You're destroying capital. And that's what's
Theoretically, you
happening.
shouldn't operate if you're only earning that rate of
That's
return.
unsustainable. That's what's happening.
As far as the airlines have come right now, do you, in all of your years of experience, both of you, either one of you can handle this or both of you, do you feel like the management teams that you deal with right now are as sophisticated and savvy as ever in this industry relative to understanding what they need to do versus where the industry has been historically?
I would say two things as it relates to management teams, because I talk to them a lot. We're a top 5 shareholder at 4 different airlines. We're the largest shareholder at a couple. And we're top 10 at a lot of other ones. So I spend a lot of time talking about capital allocation, what the right margin levels are for the returns that I would assume that I would need as the equity holder. Okay, when you're an equity holder and I'm investing on behalf of all these clients, I need to see a return on that equity of a minimal amount, okay? And so my discussions with them are, what's that minimal amount? It's higher than where we're at today because of the volatility of the business. It's still inherently in the business. And I would also say from the context of, the multiples, it's obvious that the market doesn't believe that. Mm-hmm. And so from my perspective, they have to prove that in what's good times right now. And I fully believe that the peak margins of the industry will fairly materially exceed what we saw in 1998 and the late 90s, despite the high fuel. But I would also say they need to prove it in a trough environment. And I do believe, as we talked earlier, that I think the airlines in aggregate can make money in a trough environment.
Hunter?
Yeah, I mean, I think the management teams get it. I hear that. One thing I hear from investors a lot is like, oh, airline CEOs are better now because there's more lawyers and CFO types as opposed to just like aircraft junkies, and I don't think that's fair at all. I think, frankly, two of the best CEOs in the airline industry right now, Doug Parker and Ben Baldanza, are lifetime airline guys who are not lawyers and bean counters by trade.
Under Bob Crandall.
Yeah, exactly. Yeah. Those guys are total studs, and at the end of the day, it's these CEOs and these management teams are reacting to the business environment. And
right.
the setting was just different. So you look back and be like, oh, those guys in the late 90s didn't get it and set the airlines up for failure. And on some level, that's true, but it was a different backdrop. It was a different time. So it's hard to really judge them too harshly in retrospect.
From my perspective, the free cash flow generation is very important, and it has never been a primary goal in this industry. But as an equity holder, that's kind of like cash that I feel like can be distributed to me and by proxy, my investors. For most other companies in the industrial space that I invest in the transport space, that is just kind of like a low bar. I mean, that's you got to have that to cross the threshold. Yeah. And we're trying to push to that level, at a minimum right now. We're just starting to see that in the past 18 months in this industry. So I would argue, in the early to middle innings of where the progress of this industry should be, call it 3 to 4 years later.
We've got about 12 minutes left. So if anybody has a question, I think we have a gentleman right over here who has a question. And then
Mike Ball with Northrop Grumman. Question for the whole panel, basically. If you heard the last panel where we talked about one of the issues that Congress is considering is restructuring of the FAA Air Traffic Organization. If they were to corporatize the air traffic organization as part of that restructuring, would it have a positive or negative impact on your view about the airline's profitability?
I would say it would be demonstrably positive. I truly believe, and it's hard for me to tell in a historical context of whether or not the FAA has just been under-resourced and things have just kind of gotten passed by through no fault of their own. But what I would say is I don't want air traffic control and some of the FAA regulations to be the barrier to a successful airline industry in the United States, because it is a huge benefit to the overall economy of the United States. So I do think if some parts of it were privatized, it would be very beneficial for everyone.
I disagree, my friend.
Fair enough.
I think that there is benefits to privatizing. I think history shows that industry does things better than the government almost every single time. No offense to a lot of people in this room. Yeah, no, I agree with you both. Some of it, I agree with you. Okay. I also kind of like the idea that the FAA is not run on a for-profit basis, and if it was, you would see fees go up more than they probably are right now, they're already outrageous. But fees would go up probably more as they have their own shareholders to answer to. And I also like the fact that the FAA is very slow-moving and very bureaucratic and not very forward-thinking in a lot of ways, in the sense that that still creates barriers to entry for new airlines to get slots and things like that, and access to certain airports. No offense to anyone that works at the FAA here, by the way. So it's easier for me to throw darts up here, I guess. But I think there are pros and cons. Again, some efficiencies can be extracted. I think that would be helpful for the airlines that have dominant market share at certain airports. But it does create a barrier to entry and does create some degree of bureaucracy, which helps, I think.
I would say one aspect, too, just to kind of close that loop. The use taxes that are essentially imposed on the U.S. airline industry, relative to all the other industries that I see, it's a very bizarre construct where a lot of those dollars don't get reinvested back into the infrastructure of the industry, and it's in desperate need of some updating.
Yeah.
And so, I cover trucking. I mean, trucking, the diesel tax hasn't been changed since 1994. Okay, and as relative percentage of what the actual diesel cost is now, it's demonstrably tinier, and the trucking industry utilizes public paid dollar infrastructure, whereas airlines are the ones buying the aircraft, all the ground equipment and things of that nature. Railroads the same way. It's private capital. And I just kind of feel like if there's going to be a use tax, that's fine, but the use tax should be used to benefit the infrastructure of what's being done.
Gentleman right here had a question. Blue shirt? Yeah, wait, hold on a second. She's got a microphone for you here. He's going to come around.
Hi, Henry Canada. I'm just trying to understand why you guys are confident the airlines can make money in a trough. And as I understand the logic is, well, there's 4 rather than 12, so game theory says they can figure out the right capacity cut easier, and they got management incentives, so they're more willing to cut capacity. But the other question has always been, can you cut capacity without really driving your unit costs up a lot in the short term? I mean, are you guys confident they have enough control over their aircraft costs or their staff costs?
So, part of the benefit of having fuel as a third of your operating expenses is that 65%, by my math, of airline operating costs are variable in nature, which is up from about 45% of variable costs in the late 90s before, because fuel, rather than 10%, is now 30%. So in the environment where there's a recession, if fuel prices go up and they have to cut capacity, I mean, that's a different situation. But in a longer term, higher fuel prices causing a downturn in demand, ultimately they will correct and go down as well. So in the long term, fuel prices are correlated with demand. So you're going to see relief in a third of their operating expenses, which obviously would come to 25% to 20% as that came down and down and down. But given the more variable cost business model of airlines right now, it's not as bad as it has been in the past. But yeah, that's still a problem. You know,
I mean, when was Allegiant's record operating margin? It was like
yeah, that's right.
end of 08.
Yeah, that's right. Allegiant and
the
Spirit.
fuel was such a large part of their cost stack. It's a variable operating expense now, whereas it used to be a lower percentage of the cost, but it was a fixed cost.
Got a question over here. She's going to bring the microphone to you. We've got about 8 or 9 minutes left, so if you have a question after this gentleman, feel free, just raise your hand.
Yeah, Howard Marks, Energetics. Appreciate the presentation. My question is the international versus the airlines, U.S. airlines, heavily weighted towards domestic operations versus U.S. airlines heavily weighted towards international operations. Which are the better bets? I mean, I think the most profitable airlines, of course, Southwest, which is now just expanding into Mexico, Caribbean, and down to Costa Rica, and then Alaska, which I think only goes as far south as Mexico, and how profitable they are versus the other airlines, Delta, United, American, that are facing competition from like Norwegian Air Shuttle, potentially overseas. Plus, I think these Gulf State airlines out of Dulles Airport here, I think we have 3 or 4 of these Gulf State airlines operating out of Dulles, competing against U.S. airlines and other foreign airlines. Which, if you were going to make a choice between those heavily weighted towards domestic versus international, what would you choose?
Do you have a preference?
You want to start?
Andrew?
Sure. I mean, you know, domestic profitability right now is very
Best
good.
market in the world.
Yeah, it's very good. And you go back in prior cycles, you know, for the network airlines, the domestic operation was really just like sort of a cost of goods sold. It was like, let's run this thing at a near break-even basis and make all of our money on the long-haul international stuff. And that's largely flipped. And DOT data shows that the network airlines are making more money on their domestic operations than they are on their international operations, which is, again, if you had a time machine, went back 15 years and told an airline executive that, they would tell you you're insane.
Yeah.
Right? So, yeah, you know, Southwest is not the most profitable airline, by the way. I just want to make that clear. You know, Alaska is more profitable. American is more profitable. Delta is more profitable. Allegiant is more profitable. Spirit's more profitable. So Southwest needs to charge for bags. All right, that's a different conversation. But I think that being said, all this being said, yeah, the international challenges are big. You know, Boeing is going to be delivering a lot of planes to Emirates and Norwegian. And, well, Norwegian's more narrow body, but I think that's more one-off. But a lot of the Chinese airlines have more than 500 wide bodies on order, and that's a secular, long-term challenge that they're going to have to deal with. But I think if you're making an investment decision, all else equal, it is, you're right, better to have an airline with a generally more domestic bias than international at this point, because international markets are not very good right now.
I would say that is true. The Asia Pacific to U.S. travel is probably going to be one of the fastest growing lanes of passengers daily each way over the next 10 years. So there is some need for capacity growth there. I think we had a little bit of a bubble this year with some of the Chinese carriers coming into the U.S. What I would say to that extent in terms of what makes it a different investment decision is the valuation multiples from a buyer's perspective are dramatically different for some of those entities. I mean, you look at it, American Airlines or United Airlines, the valuation multiples, you know, are multiple turn discounts to what a Southwest is at now, and not so much Alaska. You know, Alaska seems a little bit more moderately valued than it could be with all its domestic exposure, but that's probably largely predicated on what's going on between Delta and Alaska and SeaTac right now.
We only have a few minutes left. Oh, we have a question over here.
Doug Lavin, what was the market reaction to the 2 Malaysian flights, and did that market reaction surprise you? And do you think that the market is, or the customers are more used to security threats as we look at ISIS, et cetera, going forward?
Yeah, this gives me a good opportunity to say something nice about the FAA now. I apologize for saying it before thinking before. The U.S. airline industry is unbelievably safe. And more people died showering last year than flying on commercial airlines in the United States. And that is in large part due to incredibly rigid safety oversight by the FAA. And we do a great job in this country keeping air travelers safe. There was no reaction from an investment perspective. Nobody asked me about it. Investors didn't ask me about it. From the Malaysia incidents were viewed as largely one-off. Again, but at the end of the day, it's the value proposition from a safety perspective is that much more important. You know, people should feel safer now flying on a U.S. airline than they would on an emerging market airline going forward. So if anything, it's slightly beneficial.
I think still technically you're more likely to get injured on the ground on the tarmac than you are
Yeah,
in the air,
exactly.
if I remember correctly.
Yeah, it's a great.
I think from an investor's perspective, I was actually hoping for some reaction, but I didn't get it.
Yeah.
The market's largely shrugged it off. I mean, because, as I kind of mentioned, we have a very large ownership stake. I think if you added up all our ownership stakes, we might be the largest airline investor in the world right now. And it's predicated on the positive thesis that I think we have playing out for us over the next couple of years. And I relish opportunities for when people look at short-term events that really don't change the long-term earnings power of the business. And unfortunately, we didn't get it in that case.
Quick question over here.
Yeah, just Linda Larson of Fast Play. Just a quick question. From a financial market point of view, how is operational performance, on-time performance, viewed in the aviation?
I only look at it if it's completely like 3 standard deviations away from something acceptable. Like United's on-time performance in 2012 was horrible, and it mattered because it was so bad. But it's something that is just sort of expected to be good, and it's probably frustrating for airlines to hear because I know how hard that is. But we only really focus on it if it's really bad to the point where it's causing defections of very high-value customers, corporate customers. If on-time performance gets so bad, one airline can go into a corporate account and say, you got to do business with me because this particular airline is showing up 60% of the time on time, and we're 85%.
I would also say from cost overrun side, reserve crews, things of that nature, all those things come into play, the less reliable of an operation you're running. And if you really get down into it, it's not talked about a lot. Fees start to get waived and things of that nature, and there's some comp done that takes a hit on the revenue side as well. It's a little bit hidden, but it's there. So you really need to run a very safe and efficient operation.
Yeah.
We have one last question. Do we have the microphone for right over here?
Thank you. I'm just wondering how the airline safety statistics are, Christy Wagner-Starley, how they're predicated. Because analogously, for example, when people look at shark attacks, they say, oh, look at all the people in the world and such an infinitesimally small number of people are attacked by sharks. Well, if they eliminated all the people who didn't swim, if they eliminated all the populations in landlocked countries, et cetera, the percentage of shark attacks would be a lot greater. Are the airline fatalities predicated upon, are they somehow equalized with the millions of cars, the millions of trips?
Well, let's put it this way. I think there were 0 fatalities in U.S. commercial aviation last year. So it doesn't matter what relative context you're looking at.
I think all those are based on traveling passengers. Like in-plane passengers.
Right.
So 0 times 0 times anything is 0. There's no, it's a null set.
It is interesting. Whenever I bring that up, if I bring that up on air, I will get emails from people saying, you're jinxing this. Why discuss this on air? And to which I say, you shouldn't be ashamed of a safety record that is strong.
Yeah.
It's something that should be applauded, and the airlines should get recognition for that.
It's a competitive
and
advantage.
FAA and everybody who plays a role in that.
The airlines, their employees, I think people understand. That's a very noble profession to create that type of environment where you have almost a perfect safety record.
Last minute, I'm going to ask each of you, starting with you, Hunter. What's the most interesting or exciting thing that you see right now happening in this industry?
So here it is. The answer is that airlines are doing better. They're still not doing good enough, but they're doing better while labor has been getting paid. And unlike the last cycle where profits were just a function of labor getting slammed down in bankruptcy, so you've got labor union leadership cooperating with management teams with sharing the same goals for the first time since deregulation, while airlines are making more money on a relative basis than they have in prior cycles, taking commercial risks, pushing the envelope, treating their good customers better and their bad customers worse, which is what every good industry does.
Yeah.
They're taking chances and they're experimenting and they understand that this is not the end. We're still in the middle part. And they're generating some free cash flow and they're reinvesting it back in their product, which ultimately makes customers happy. So it's managing the 3 constituencies of investors, customers, and labor to a better degree that they've ever been balanced before in the past.
And for you, Andrew?
I would say for me, it's twofold. It's one, the focus on returns on capital is just, I can't tell you how much of a long duration tail that will have of benefit for the industry. If that's your guiding light, then the industry will continue to do well. And I would say the other aspect of it is the distributions of some of that free cash flow to shareholders that we've seen over the last 18 months.
Yep.
That's what real businesses do in almost every other industry. They pay dividends, they buy back stock. It creates a sustainable enterprise that accretes value over time. And that's what attracts longer term investors.
Andrew Davis, Hunter Keay, thank you very much. Thanks, guys. Worked out really well.
That was fun.